Hey guys, coming to you with a quick little video on the DXY and how we use it in trading against all assets. So the DXY is a basket of currencies all pitted against the dollar. Mostly in that basket is going to be the euro because it's used by so many different countries. You probably don't need to know all of that. What you need to know when trading it and you're starting off with it, and you want to know why so many people use it and it's correlated to assets. What we have pulled up here is the DXY on the weekly. Okay, and all these red lines you see, those are different levels of support and resistance over its history. Okay, so we're going to zoom in a little closer and I'll show you in just a second on some of the other market indices how it correlates opposite. But what happens is, as the dollar's gaining strength, let's say the DXY goes from 79.93, makes much long runs up to 100.616. If you're wanting to gain value in your dollar, you want your dollar to be worth more, essentially. You want to have more of them at this price. So, if you have, let's just say, 100 shares of Amazon that you bought in June of 14, okay, June of 2014, you buy 100 shares of Amazon, your dollar's worth 79 cents, essentially, and you want your dollar to grow. Well, you see that this trend is starting, and a lot of other economic indicators are telling you so. You want to take your dollars, which are not actual dollars. You own an asset with that dollar value. You sell that asset for cash. You're holding cash. So while you're holding that cash, it begins to grow in value. The purchasing power, it runs up in value over almost to $1 and a penny, essentially. At that point, your dollar value has grown. Well, when everybody, Wall Street and big investors, when they're getting out of their assets, they're selling the assets that they owned for cash. And that makes the price of the asset go down from supply and demand. So therefore, Amazon's going down because nobody wants Amazon stock. Everyone wants dollars. So they go in there and the people are fighting for the dollar. And it's pushing the dollar up while the price of Amazon goes down. So it's inversely correlated. Once they get to a point that traders feel or economic conditions have turned to point that there's just not enough strength in the dollar, or whatever the situation or the catalyst is at the time, could be many different things, then people say, okay, my dollar has grown in value while these assets such as stocks, crypto, have fell in value. Now I can purchase more of that Amazon with a higher priced dollar. So I want to get back into stocks because I think our run is over with here. So they take the higher priced dollar, purchase back into stocks, which now no one wants the dollars. They want assets. So it starts driving the price down. So you see how that works? It's inversely correlated. And right now we have been on a rip, and you can look back at some of them. So in 2014, we had a run for several months that just we thought blew up, right? But we've just had such an amazing run here lately, and we're getting to that. But on the other side of that, let me show you real quick. Here is January of 17, December of 18. This top right here where the dollar peaked out. Well, as the dollar was making was the dollar was peaking out and crashing. Well, you can look at the value of stocks and crypto and all that made highs, made runs. So you've got to look into it's inversely correlated there. Uh, pretty amazingly, if you look right here on the bottom of this, we had our first Bitcoin peak, our second Bitcoin peak. These were the bottom of the dollars here were the high, and I'll draw this out in yellow so you can see or look back later. These two peaks right here, those were Bitcoin's highs. While the dollar were making a double bottom low, we had a double top high on Bitcoin. And as Bitcoin has declined, what have we had? We've had the dollar make a rip. So Bitcoin and stocks have declined. Now, this follows Bitcoin and some of the big tech companies better than anything. I mean, you can flip the chart upside down and it's almost identical. But what we've got going on now, we're having a pullback in the dollar back to levels, and that's where I was getting to these red lines. All of these are showing areas of confluence from history that it has been support and resistance. So you would expect them to be areas of support and resistance again, because they have in the past. And what have we done in the last couple of weeks? We have came back down to test a level of support and resistance, and as of right now, we're making it support again. Now our thoughts are, if we see our next weekly candle open up, does it open below this? Majority of the time, if a candle opens below a support and resistance, it tends to want to run to the next support and resistance. So we'll see next week where this candle opens up for the DXY, and we'll kind of know which direction the markets are going and assets are going. So if we open up below, you see we wicked below it and we came right back and we're holding the line of support. If we open a candle body below it and open and close it below this line over the coming weeks, then I would expect that we see it here, okay? If starting out the week, we, with whatever factors of news, we stay above this support and resistance, and next week we close that candle full body above this, then I would expect it to have a bounce and start headed back up to the next one to test it as resistance or blow through it. But that's how it works. It's that simple, and that's all you really need to know. There's a lot of other technical crap that goes into it if you're a Forex trader, but stocks and crypto is you want to watch the DXY and see what it's doing. And we can go down on a smaller time frame real quick. Let's look at the daily and what happened. The daily come in, we fell yesterday and dropped below the 200-day moving average and closed. But today we have ran up and got a nice rally, and we're testing that 200-day moving average again. So we need to see. Today it doesn't look like we're probably going to get that confirmation, but we're looking at Monday. Do we open a candle and break back above it and start to rip? Or does this rejection follow with another rejection and a candle open lower, pushing us down? So really, if you want to get an idea of where your markets are going when you're trying to place your trades, if the dollar is going up, assets are going down. When the dollar's coming down, assets are going up. So all of these two big rips, you can look and go back through and see all these downtrends. Those are big bear markets for the dollar, big bull markets for assets such as Bitcoin or what have you. So Bitcoin was ripping right here, going up as the dollar was going down, and then it turned. Same thing. Bitcoin was going up as the dollar was going down. So here's our last two bull runs right here. And it's just very, 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 very solid indicator. Not hard to use, but that's all you really need to know about it is keep an eye on this. If we're breaking these levels of support and resistance, we're going the opposite way with assets. So I can monitor this, and when we start seeing this trend, which was been very profitable for our Discord right here, is we start seeing these stair steps where we broke a support and resistance, we back tested it, we sprung, back tested the spring, ripped again, sprung, back tested the spring, ripped again, and on and on and on. And of course, you don't get them all, but when you get right here, we saw, all right, a back test of a spring, and we thought we was going to rip again, and it failed, which turned out to be a long-term resistance way, way back. Very weak, in my opinion, but it got beat down. Economic indicators are changing. So now that we failed, we're going the other way. We've got to start looking what happened here. We broke through, but we didn't quite come back and back test this area as a resistance yet. So we may have a lot more volatility to go. Maybe what we're doing right now is we are testing this as support and then we bounce. If we keep falling through it, then we just have a waterfall of a bloody market for the DXY. So hope that helped at all. Any questions, leave them in the comments. I'll try and get back to you and answer. Thanks a lot.